Oil and gas investing explained in less than 3 minutes. Take a listen.
Yeah, I mean, I think it's important to recognize, like, if you're a believer in the energy sector or more specifically, whether it be the oil and gas sector, right? You could obviously invest in publicly traded entities, right? So you could look at the upstream companies, which are the companies that drill the wells. You could look at the midstream companies, the pipeline companies, which are great income plays, right? And then you could look at the downstream companies, which is where all the refining of the product is done. So ETFs, publicly traded companies, those are ways to invest directly into the energy space. If you're going to invest direct, meaning going directly into owning the physical asset, the most common way for retail investors is into the upstream side, which is directly into oil and gas wells. And so that's kind of and the two categories there are what's called working interest investments and royalty or mineral interest. So the two most common. I could explain that further if you'd like me to.
Yeah, well, what would the difference be between those two approaches?
Yeah, so if you're invested into what's called working interest in a well, it's akin to equity in a well. So if you're a working interest owner in a well, let's say that you own 10% of a well, you are responsible for 10% of the CapEx. So to make the math easy, let's say it was a $10 million well, then you're responsible for $1 million of that. And then you're responsible for your portion of the monthly operating expenses. And then you receive your proportionate share of the revenue when you're a working interest owner. If you're a mineral owner, mineral owners get paid off the top. If I own royalty rights or mineral rights, which basically converted to what's called a royalty. So for example, let's say you owned all the minerals on a location where someone was drilling a well. And I, as the operating company or as the oil and gas company, and I came to you and said, I want to lease your land and I want to lease your minerals because I'm going to drill a well here. The negotiation points there are how long is the lease for? How much are you going to pay me per acre? But the most important one is what is the royalty rate that you're going to get paid? And that royalty rate typically averages somewhere between 15 to 25%. It's kind of a standard range in oil and gas. So let's say that you had a 20% royalty. So as a royalty owner, you don't pay any of the CapEx. You don't pay any of the monthly operating expenses and you get paid first. So let's say, for example, in 1 month, there was $1 million of revenue. You as the 20% royalty owner would get $200,000 straight off the top. You get paid first. And the $800,000 is what's left over. Then you take the $800,000, pay the monthly operating expenses. Net revenue is what gets paid out, distributed to all the working interest owners.